Howdy, everybody. Welcome to Liberty Call. Today is Thursday, April 17th, 2025. Hope you're having a fantastical day out there on the interwebs. It is a gorgeous day here in Colorado. It's like 68 degrees, cool breezes, sunny, not a cloud in the sky. You should be here right now. Unfortunately, it's going to snow tomorrow. So I think we're getting one last snowstorm that's in the forecast for the next few weeks. So, and I'm packing up my fifth wheel because we're headed down to Houston for a week or two to clean out my dad's house. So, awesome, fun times ahead of us. So, he was a hoarder and a pack rat and just a miserable person to begin with. So, the fact that I have to bother with this and he had no estate plan or anything, again, for people my age in their 50s, 40s, if you got parents who are in their 60s, 70s, 80s, make sure they have their estate plan done. I mean, I nagged this man for years to, have his stuff in order. You never know when you're going to kick the bucket. And here we are. My brother and I have to deal with all this mess. So, anyways, well, on to other things. Markets are on edge again as recession fears mount and the trade war drags on. United Health tanks 23% on weak guidance, but Eli Lilly and TSMC are help keep the S&P afloat. Trump's turning up the heat on Powell, demanding rate cuts while the Fed warns tariffs are jacking up inflation. Well, I would say lowering interest rates would actually goose inflation or heat it up, but what do I know? Global alarms are sounding and the storm clouds are gathering. So before we dig into the news today, I need some help from you. Need some thumbs up, a like, share, subscribe, a follow, and press that notification bell. All right, well, let's get into the markets for today. Dow Jones finished the day down 1.33%, 527 points, closed at 39,142. S&P 500 up 0.15%, 7 points, closed at 52.83. NASDAQ down 0.13%, 20 points, closed at 16,286. The VIX down 8.52% today. It's at 29.86. Canada up 0.36%, Brazil up 1.04%, and Mexico up 0.71%. Well, that was yesterday. It looks like they weren't open today. Let's see here. Headed to Europe. Germany down 0.53%. The UK flat at 0. Let's see. France down 0.6%. Netherlands down 0.16%. Spain down 0.19%. Italy down 0.24%. Switzerland up 0.46%. Portugal down 0.15%. And that's it for those. Headed to the Russian exchanges, both in the green today. The MOEX was up 0.1%. The RTSI up 0.8%. And the overnight markets, the Nikkei Japan was up 1.35%, Australia up 0.78%, New Zealand up 0.22%. In China, the Shanghai up 0.13%, Shenzhen component down 0.16%. Let's see, China A50 China A50 up 0.2%, DJ Shanghai up 0.12%, Hang Seng up 1.61%, and the Taiwan weighted went closed on the 16th, down 1.96%. All right, so that's the markets. Hit the wrong button again. I have a way. All right. Well, let's jump into the market recap. SP 500 climbs after recent loss, but gains kept in check by ongoing tariff angst. The SP 500 rebounded Thursday, clawing back from Wednesday's slump, though gains were capped by continued uncertainty surrounding tariffs and global trade tensions. President Donald Trump injected optimism by declaring, quote, big progress, in quote, in trade talks with Japan, the first major U.S. trading partner to engage in direct negotiations since the new tariffs began. Japan may serve as a template for other nations seeking exemptions or better terms. Despite the rebound, major U.S. indexes remain on track for weekly losses. With the NASDAQ nearing bear market territory, corporate earnings added more fuel to the volatility. United Health plunged 22% after slashing its profit outlook due to rising medical costs. In contrast, Eli Lilly soared 16% on strong phase 3 results of its new type 2 diabetes drug. Taiwan Semiconductor rose 1.2% on robust AI-driven chip demand, and Blackstone gained after a solid earnings beat. Meanwhile, Google, parent Alphabet, dropped 1% after a legal ruling found it guilty of maintaining an illegal digital ad monopoly. On the political front, Trump criticized Fed Chair Jerome Powell again, saying his termination cannot come fast enough, and that's in quotes. Powell reiterated Wednesday that the Federal Reserve isn't considering imminent rate cuts, citing the risk of persistent inflation from one-time price hikes due to tariffs. I don't think tariffs would really cause a lot of inflation. Inflation is created when you create more money in the system, which when you lower the interest rates, that creates more borrowing. More borrowing means more money into the system. So, Powell's doing the right thing, whether or not, Cheeto Boy thinks it's a good thing because he wants to, get the economy in his world, in Trump's mind, low interest rates mean more borrowing, which means more productivity in the economy. But in the end, what it really creates is inflation, and inflation is bad. I mean, it may make your equities look good on paper, but when those equities in relationship to something else like gold or silver haven't really moved or actually gone down, you really haven't gone anywhere. Let's see, where was I? Elsewhere, jobless claims fell last week, pointing to labor market resilience, but single-family housing starts hit an eighth-month low in March, signaling weakness in home building. With Japan engaged in negotiations and the European Commission expressing openness to talks, Bloomberg also reported that China may be willing to negotiate, though it demanded more respect from the White House. Respect my torta. These developments hint at possible de-escalation in the trade war, though markets remain volatile and Fed policy remains tight. All right, so that's that. Let's jump over to some data. The March housing starts report from First Trust. Mr. Nate Gursey put this together. U.S. home building experienced another sharp swing in March, falling 11.4%, following a surprisingly strong rebound in February. This marked the largest monthly drop in a year, bringing construction activity even lower than January's weather-impacted levels. The volatility reflects a challenging environment for builders who are contending with high home prices, elevated mortgage rates, and now additional uncertainty from new tariffs that could increase material costs. I think we probably have all the materials here in the U.S. Just have to source them. The decline was led by a 14.2% drop in single-family housing starts, the steepest since the COVID lockdowns, with most of the weakness concentrated in the South and the West. In contrast, home building in the Midwest and Northeast saw gains despite recent fluctuations. Overall, home construction has been stagnant, with starts down 1.3% compared to 2 years ago and current levels echoing those of 2019. However, home completions remained relatively strong in March, down just 2.1%, with an annualized pace of 1.549 million units, above the estimated 1.5 million threshold needed to meet demand. Completions have completions have exceeded this pace in 11 of the last 12 months, suggesting builders are prioritizing finishing existing projects over starting new ones. As a result, the total number of homes under construction has dropped 15.2% over the past year, a decline usually seen during housing downturns. But analysts argue that a persistent housing shortage makes a full-blown bust unlikely. Home builder sentiment rose slightly in April, with the NAHB index ticking up to 40 from 39. Meanwhile, jobless claims suggest modest labor market strength, with initial claims down 9,000 to 215,000 and continuing claims up to 1.885 million. On the manufacturing side, the Philadelphia index plunged to negative 26.4 in April from a positive 12.5 in March, highlighting regional factory weakness amid ongoing economic crosswinds. Despite these challenges, analysts expect housing prices to continue rising through this year. Well, that's some positive news. All right, last up on the docket here from Zero Hedge, quote, termination cannot come fast enough, end quote. Trump pummels, always too late and wrong, Powell. So Trump is mad at Powell because Powell won't do what he wants. And, well, I mean, he should have, Trump was still in office when they started all the money printing back in 2020. He signed the first stimulus deal. So Trump bears some of the blames, but he's never going to accept it. All right. President Trump ramped up his criticism of Federal Reserve Chair Jerome Powell on Truth Social, arguing that Powell's removal, quote, cannot come fast enough, end quote. Trump believes the Fed should have already lowered interest rates this year, especially in light of easing inflation indicators and ongoing global rate cuts, such as the ECB's seventh consecutive cut. Trump dubbed Powell too late and slammed his recent economic comments as a complete mess, noting that oil prices and groceries are falling and that tariffs are benefiting the U.S. economy. Well, as far as the tariffs, we really can't say. I mean, it's been a few weeks, so nothing has actually changed. You have to wait 6 months or a year to really see if the tariffs have any real effect. Where was I? Despite Trump's pressure, Powell reiterated the Fed's focus on preventing tariffs from causing long-term inflation, which typically, again, I can't say this enough. You typically don't get an inflationary event from tariffs because if I don't know, let's say widget A goes from $100 to $150, you don't have any extra money in your pocket like you would with stimulus. So you have to subtract that $50. If you really want widget A, you got to subtract it from widget B, C, and D, and either not buy one of those or figure something else out in your budget. So that's the situation now with stimulus, where they're basically dropping money out of helicopters. That's extra money in the system. So that's what actually pushes up prices. Yes, the prices go up due to a tariff, but in that case, it's a zero sum game. In the situation where they're lowering interest rates and creating more money in the supply system, or creating stimulus or sending out stimulus checks, or any of those sort of inflationary events, you're just adding dollars into the system, which then if there's a larger pool of money, more money, you have more money chasing the same amount of goods, prices will go up. So that didn't make sense. Give me a call. I'd be happy to explain it one-on-one. Where was I? He emphasized the central bank's mandate to maintain anchored inflation expectations, not to react hastily to short-term price fluctuations. Powell has previously stated that he would not step down if asked, and that the law does not permit the president to remove a Fed chair without cause. And frankly, I haven't seen. I mean, Trump can jump up and down and make his face turn extra orange, but I don't think the Fed chairman has broken any rules or laws or anything. Defined as misconduct or neglect of duty, not policy disagreements. Meanwhile, Treasury Secretary Scott Bessent confirmed that the administration is eyeing a potential Powell replacement this fall. He acknowledged the importance of preserving the Fed's independence while Trump continues to his campaign for immediate rate cuts. Again, the Fed is a separate entity. It has nothing to do with the federal government. It prints money and lends it to the United States, which then they charge some interest on. So that's where they make their money, is charging the government interest for printing up dollar bills. The situation echoes prior concerns about Fed politicization, particularly after former New York Fed President Bill Dudley's 2019 op-ed urging the Fed not to support Trump's trade war. Critics argue that the Fed's refusal to cut rates amid tightening financial conditions, despite slashing them pre-election in 2020, undermines its apolitical stance. See, remember, the economy was going into the tank in fall of 2019, well before COVID or any of that other stuff. I mean, that's why I think COVID was an excuse just to paper over the economy, and basically printing money to help out, big business wasn't going to fly with the average American. Now, if you say, hey, we need a bunch of money to, pump into the economy because there's this mystery cold that, might kill you, it didn't. The reality is that, they need an excuse because the economy was going to collapse in 2020. COVID was the perfect reason to print a bunch of money, help out big business, help out the, big pharma, and, make everything seem like it was fine. So anyways, all right, let's finish this up. Adding to the tension is an ongoing Supreme Court case concerning the removal of independent agency officials. While Powell noted that the case is under scrutiny, he expressed uncertainty about the potential implications for the Fed. Again, the Fed doesn't work for the government. For now, Powell's term as chair runs until May of 26, with his governor term ending in February of 28, unless legal or political forces intervene. All right. So again, I mean, I'm not a Powell cheerleader or anything. Yeah, he certainly has his own problems that things I disagree on, but certainly this is not the way to do it. All right. Well, that's everything that I had to ramble on about today. So I hope you've enjoyed the best free financial commentary show on the interwebs. And if anyone needs to reach me, where do you go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be glad to help you sort through all this mess that's out there in the world. All right. Well, hope everyone has a wonderful evening. It should probably be snowing the next time I talk to you guys online. Hope everyone has a wonderful evening, and I'll talk to everyone next time. Adios.